People who want to join on YouTube, they can watch on YouTube. People who want to uh, take this on Zoom, I've shared the link. All right. Just as a confirmation, because can you see my screen with DOS? I need one confirmation. Anybody can confirm me? Yeah. Thank you. All right, guys. So first thing first, let me see if I can show the whiteboard as well. The whiteboard. Let me stop sharing, stop share, and choose whiteboard. You can see my whiteboard. Can somebody confirm me if you can see my whiteboard? I've written whiteboard. Okay, cool. So just all right. So tomorrow we have FOMC at 2 p.m. and it's totally irrelevant whether Fed says 75 basis points or 50 basis points, because right now market has priced in this thing 75 basis points. So this is totally priced in. This is not priced in. Like now, but whether should we go ahead and make a trade based on this? The answer is no. You have to wait and get a clear idea on how Fed is projecting its forecast for the hikes. Last time they clearly said they are worried about the inflation, and inflation is not peaking. Instead, inflation is going at a consistent pace, and there's no change in the supply and demand. Issues with respect to China, COVID has added to that concern, and there's no uh, resolution in Ukraine-Russia war. So that thing is still open. It may change in 1 week, 1 month, 1 year. We don't know, because that completely is unknown. But what is known right now is that the CPI came at 8.6% and PPI was 0.8%, or you can say 0.6% here. It was higher than anticipated, and it was online or somewhat weaker than anticipated. So this is the price where purchasers are paying, and this is the price where consumers are paying. So as of now, Fed last time said that they are not thinking of a peak inflation, but they really want to see. They never mentioned about they want to cite out a peak inflation. It is clearly evident that that's not happening. Inflation is not peaking out. Also, if you heard Christina Lagarde from European Central Bank, she's also insisting that yes, inflation will take some time to ease off. Right now, that is not happening. In between, what they can do is they can handle the monetary policy, they can address the interest rates so that they can cut down on the inflation. Now, question arises, should Fed increase the interest rates to 75 basis points, meaning 0.75%, or should Fed carry on to manage 50 basis points? And then, because last time Fed in their minutes mentioned in June and July, it's going to be 50, followed by 25 basis points in September. Will this number change anything in Fed? I don't think so. So for me, I think Fed will still go with 50 basis point. Can it change futures forecast? Probably, yes. But I think they will give a clear indication in the press conference. So be clear that when you are listening to the press conference of Mr. Powell, hear about what is going to happen in July and September. And if they go ahead and do 75 basis points, that will be a shock to the market. But as I said, market has already uh, accepted or discounted this news that yes, Fed may go and do the 75 basis point hike. In that case, market or ES, as we have discussed previously, has tested the long-term regression channel. I even posted that on Twitter today. That channel bottom has been tested. That was around 37.10, and it immediately bounced from it. Now, if it loses that, and if it loses for let's say 5-7 minutes like it did today, and then come back, it means it has accepted that news. But if it breaks down and then start flushing down, there are no supports until 3600, 3600, 3500. There are not actual any supports, because when we went up in COVID from 3200 to 3700, we went almost in a clean line. There were consolidation, but there were hardly any cuts. So the support is pretty limited there. So be careful when you are listening. Do not get enticed and think, oh, the news is on TV at CNBC. Let me just pick up my trade and start executing. No. If you really want to make sure you want to make money, listen to him. Listen to him what he's saying, and usually he starts at 2:30. By 2:45, 2:50, you will have a fair idea how that conversation or conference is going, and make a decision whether you want to go long or short after that. The volatility will be very, very high. And as I posted, technically, we are oversold. So if Fed says, okay, we are increasing 50 basis points now, we are fine with 50 basis points in July, and will be data dependent, I think market is going to give a thumbs up and go higher. Because right now, all the yields, 10-year, 5-year, 2-year, 30-year, they have reached high because they have like discounted that, yes, Wednesday afternoon, we are going with 75 basis points. Now, in case Fed goes with 75 basis points, then it is already priced in. We may have initial flush, maybe 50 points. Right now, it's 3750. We may go down to 3710, 3680 range. If we touch 3680 and come back above 3710, I would take a long there, because it means it has tested the support and now come back above the regression channel area. If it loses that, no point going long, then it's a straight flush. In case it is 3760 and above, that opens the door for a short squeeze. Short squeeze is there because we have back-to-back 3 gaps in SPY and triple Q. So if we cross 3760, that's about 377, 376 something in SPY. If we cross that, it means market is going to test 3800, which is a resistance area, or like if I give you a precise number, 3805, because that was the last low. Then after that, 3860, that was previous low, and then 3920. So these are the areas which I think we might see if market goes above 3760. Even in the future market right now, the volume is minimal in the month of June future, and volume is all right in the month of September future. September has a premium compared to the June. So you will see a difference of 3 to 4 points in September. But in case of June, if you see number 3760 and it's holding, I think we will see some reasonable rally after that. All right. So two numbers you have to keep in mind: 3710, you're going short; 31,760, you're going long. In between, it will be choppy. Like today, it went to 3760 multiple times and then flushed to 3730, 3720, and eventually it made 3710. Stop loss for all these situation is 3725, because 3730, 3725 is a mid area. So if you're going long above 3760, 3725 is the stop loss. If you're going short below 3710, 3725 is your stop loss. But we are oversold, and when we are oversold, also we are making a evening star or morning star on ES. So all in all, this constitutes a possible up move for 100, 150, maybe 200 points. 3760 to maybe 3950, 3960. That's clearly open. On the downside, if Fed is really, really pessimistic about the economy, Fed, because until now, Fed was happy because the job growth was there. Fed was happy there's less unemployment. Fed was happy with the salary rates. So if they change any of this and their stance on it, we might see a sell-off. But I think Fed will try to calm the markets tomorrow. He will try. So let's see what we can do. But again, if you are in positions, do not try to jump into that volatility. I myself have SPY positions, but I will close them maybe in the open or at around 11, 12. I will not carry them into the FOMC meeting. So that's my plan. I expect Fed to be a positive confidence giver to the market, because since market has declined substantially and we are in the bear market territory, nobody from the finance, nobody from the government, no one from the FOMC has come forward and give any kind of confidence to the market. If they are not doing that, then we have not seen 3,000, 3,200 yet. We can easily go to that level. All right. So now that's my plan. If you want to talk regarding that, I have it open. You can raise your hand and then we can discuss one by one. Or if you have any other kind of thought process, please go ahead and share. Yes, Mitchell.
Yeah, hi Neville. Thanks for this meeting tonight. So let me ask you a question. So I know you were saying that we could potentially get a relief rally, potentially based on what they say. Do you think it's, when you mean by go long, do you think going long for like maybe a couple of days is okay? Because I know a lot of times you say after these big Fed meetings that there may be like a trend for a few days, and then where it needs to go is where it would need to go back to.
I would say in the past couple of Fed meetings, what exactly happened is after the Fed meeting, the market went into one direction and next day it gave up all the gains. So I don't think that will happen this time. So it should run for a couple of days. Because let me stop this whiteboard and share my screen. If you look at this ES, right? See, we are 1, 2, 3, 4, and 5. 5 red candles going into the Fed meeting. And we are well away from our
34. That's a 34. 34.
This is 34, right? What is it? So, and that's like 4,052 and 3,936. So because this is EM, let me just go to normal ES where I have all the levels. This is, it tested right here. It tested, held the support and bounced. Now this entire piece is setting up for a morning star, and we have all the conditions. We went down considerably, right? We have a dodgy in between. Third, we have a green candle, which is right there. So possibly we might end up at 38.80 or above tomorrow or in next one day. That is the prime target right now. 38.55 is first resistance level, and then this gap, which is at 3900. So I see again, this is all technical things. And as I posted in the chart, if you see, and one moment, as I also mentioned previously, that whenever we have failed, we have made onto a new low. If we start from here, right, we failed, we made first low. After this, we failed, we made low. And look at where we got the support, regression trend line, main line. Here we went and test the bottom of the regression line. Again, we came, we failed, came to the support and bounced. Then we failed here again. We came, support and bounced. Then we came, we failed and bounced. In between, we also bounced here. So if we have to bounce, technically it's giving us that confirmation. Yes, the candle pattern that's suggesting this is a long-term regression line. This is in the picture. If we lose this, then something ugly is going to happen. That's why I'm saying 37.20, 37.25 is an ultimate stop loss. Because that's the what you call regression line matching at 37.24.25. So if we can hit 39.30, 38.55 in one day, that's all right. If we cannot do that, it may happen in 2 days or by Friday. Possibly, yes.
Thank you, Neville.
No promise. Anyone else? No one has any other questions? Yes, Karthik.
Naval, this is just my thought process or bouncing an idea. So if Fed raises the interest rate by 50 BPS with such a high inflation, will the market not think Fed is not doing enough to tame the inflation? That is first question. The second scenario, let's say if they increase by 75 basis points, do you think, since at least for tomorrow, since market has already priced in that or looking at that, do you think it will rally up to 3800, 3900, and then react later in a day or two?
Karthik,
Those were just...
sorry to interrupt you. I just explained that we cannot like estimate what will be the outcome of FOMC. We can just think that these are the
react.
options. So I'm not reading based on what is the outcome. I'm trading on the level. That's why I clearly mentioned 37.60 and 37.10. I'm expecting 50 basis points and I'm expecting market not to react. But I'm not trading on that. I'm trading on a level 37.60. So if you
Got
fill your mind that yes, it's going to be 50 or 75, you will end up in a confused state. Because then you will
got that.
figure out that what's happening. And by the time you will realize either you're in a wrong trade or you will hesitate to jump in a trade. See, if you look
Got that.
at ESM, which I was trading, ESM 22, it's struggling at 37.60 area. Why it is struggling at
Right.
3760 area? Because this has changed. That was the level where it, even here, the close is 3755 and the open is 37
Open.
in this case. That's a very tough area for it to crack. It's trying its hard. Even in the day, if you break it down into 30 minutes, you will see it was finding hard time to cross this area. Every time it came into this area, right? This was 10:30. It came here, failed, went down. And look at the cycles. 1, 2, 3, 4, 5. And then it came out of that range. Again, it went, tried to test this 34, failed, came back. So it's not able to cross. The similar chart was there for Tesla, which I posted in the morning as well. And if you look at Tesla and compare with ES, Tesla finally attained the 12 EMA right here, which I posted 656. And then it never looked back. It just went on and on and on. Even in the after hours, it's like up more than 1%. The same thing is with ES. If it crosses that area and holds it, I think it will run really, really beautifully.
Understood. Understood.
So
Thanks,
don't
Naval.
think too much because overthinking end up with nothing.
Understood. Thanks, Naval.
Anyone else? Yes, Rajiv.
Hey Naval, how are you doing?
I'm all right. How are you?
Doing well, doing well. Thank you for giving me a chance. So my question or maybe comment. First, let me ask a question. So you are still expecting this to be a short-term bounce, right?
See, we are in a bear market. So in bear market, the relief rallies are always there.
Okay.
So
And then from a medium to long-term perspective,
I
we
don't
are still expecting
know.
more downside.
Again, I do not believe in medium to long term. I trade day by day, and I have a perspective which I shared in December last year that we are
Mm-hmm.
not making 5,000, we are going down, and I'm
Okay.
still with it. I cannot estimate that yes, where the market is going to be in 2 months, 3 months, 4 months. That's very hard.
Yes, yes, definitely. All right. Thank you, buddy.
No problems. Yes, Kiran.
What time is the meeting tomorrow?
If you don't know FOMC at meeting, then you should not be even trading, buddy. That's being very honest. It's 2 p.m. Eastern time.
Okay. Okay. So, but yeah, how about the Google actually? So I'm supposed to ask you this question, Naval.
No, it's not about Google. Like if you're trading and have been trading for more than a year or at least a month, you should not be asking this because this is really important for the traders.
Okay.
It's like you're going to a class 1 and you don't know the alphabets.
Okay. Got it. Thank you.
Yes, Surya.
Hey Naval, how are you doing?
I'm good.
Quick question on the reverse repo, right? I see Twitter is exploding. Oh, $2 trillion, $2.2 trillion reverse repo. I tried to Google, but the terminology is way above my understanding of microeconomics.
Let me explain what is.
Yeah, that would be great help. Thank you.
Repo rate is the rate where the Federal Reserve gives loan to the banks like JP Morgan, Bank of America. Okay, they give credit to these banks. Reverse repo rate is the rate on which Federal Reserve takes the money from Bank of America or JP. Okay, that's the definition of whenever a central bank issues the dollars or money to a private or a government bank within the country, that's a repo rate. And when the Federal Reserve takes a loan from these banks, that's a reverse repo rate. And this is done to maintain the liquidity in the market. If Fed thinks that yes, there is ample money, so they increase the repo rate so that the liquidity gets reduced because the borrowing will take higher. Reverse repo rate, it takes higher or reduce to reduce the liquidity as well. It's mostly used for overnight bonds and yields, the reverse repo rate. One second, somebody's asking me. It's basically today's high. Jeremy, 3760, 3710. Guys, if you are not speaking, mute yourself. There are 84 people other who are listening. What is the Zoom link on Twitter? I do not understand your question, Vijay. Hi, Vivek.
Hi, Naval. I just wanted to ask, like, I'm trying a small strategy, and I just wanted to ask, like, if it is like right or wrong. So, for example, if I start with a put spread, and like I was yesterday evening, I got a Apple put spread, and like today, when the sell option, like the option which I sold, in the beginning it was $90. When yes,
This meeting is focused on FOMC.
that's all.
Right.
Okay, sure.
I don't want to derail the conversation. You can ping me in the chat and I'll answer.
Sure.
Yes, Mitchell.
Hi, Neville. So, can I just get your opinion on like with this rate hike, and then how it's correlating right now with, I don't know if you've seen the news. It was actually, I don't know if it came out today or yesterday about how they're raising the mortgage rates. Did you see that? Like how people are, like it's over like 6% now for the 30-year fix.
Mortgage rate is based on the rate. That's what I said. The rate which central bank loans money to the bank is a repo rate. So when it increases that by 50 basis point, bank, if getting a loan at a higher rate, will pass on that money, that difference to the customers. So the mortgage rate will automatically get higher.
What do you think about, I know every time I ask you this, you've been telling me this about how much longer do you think before, I know they've been saying like the housings have slowed down drastically. What do you think, with the higher rates hikes and inflation still not being intact, that this is going to continue with like the housing market going into the fall?
Housing is the slowest sector to get impacted. When it started, it was slowest in the housing. See, one thing you need to notice, equity is the quickest. Then the second was commodities, third was crypto, and fourth is reality. So stock market has already given up gains, 20-30%, 30% in Nasdaq, 20% in S&P. Gold has given up the gains. Commodities, all the metals have given up, but the crude and energy, they are still holding high. Reality sector, now there is no bidding war which is happening, so that has taken a good price down. Third thing, buyers are getting much more inventory and buyers are cautious. Sellers are trying to sell at any given price. They're trying to cut the rates, yes, but there's still demand, and that demand will be dumped maybe in one or more hikes. So it's not gonna see. Fed may increase the rates to maybe 7%, 7.5% by this year with respect to mortgage rates, not to the repo rate, but probably in 2 years or 1 year down the line, it will reduce the rates because you cannot have a high interest rate regime and still grow like that. They will reduce it. So if you want to buy a house, go with a flexible rate or a floating rate, which fixes for a certain period and then runs with the floatable or the current market rate. So housing will be impacted. It has already started impacted. Like if I can uh, ask somebody who's trying to sell a house, that will give you a real answer. So person who's trying to sell, just check with him whether he's able to sell, he's getting that many offers. Just try and do that kind of research and you will see that yes, it has eased off reasonably. So impact of yes, tomorrow's rate will be felt by housing sector. Hamza, I am not a person who likes crypto at all. Uh, it's something which is always, I would say, a high risk asset with no underlying thing to back it up. So when you have a asset class with no underlying, then you may end up in zero, you may end up at 100,000, you don't know. I entered in Bitcoin when it was 700. I got out at 5,000, 8,000, and since then I have not traded crypto because it was going outside of my understanding. Why a simple uh, technical thing can be this much value? I have no idea. Oil is high because of the less production. It's not because of supply and demand. US did not upgraded or reinstated their shale gas production since COVID lockdowns, and now they are 2 years short. So if they have to reinstate the shale gas production to compensate for uh, the demand, they should do it. It will take, I don't know, at least 2 years. And until then, it depends on the price from OPEC. OPEC are not increasing the production. And since COVID is gone from almost all the countries, there's a high demand. With less production and high demand, there's an issue with what you call oil. But high inflation, people will also cut down onto uh, uh, derivatives of crude, which will also reduce the demand. So in any case, crude is not a supply demand issue. It's something which is related to the proper macroeconomics. Anyone else has anything to discuss? I'm asking now, but otherwise people will come and ping me and say, yes, Vijay.
So, Naval, one quick thing is the put call ratio and the VIX is not going up as we usually see. The VIX is still under 35. So this is because of like oversupply of everybody is trading options, oversupply of vol that's causing this falsely low VIX. Or what do you think? Today VIX is 32. You know what I mean? Like we are down like
First of all,
300.
let me clarify this to all the people.
Sure.
What exactly is your definition of VIX?
So usually we see VIX will rise significantly when there is a drop in market, right? It's just like 1 month implied volatility of FPX contracts in 1 month expiration, right? So that should go up significantly.
I'll explain. It's not that VIX goes higher when the market drops. Can you mute yourself? I'm getting background noise. So what exactly happens is that each stock has a volatility. Each stock has derivatives. The price of the derivatives depends on the volatility. And Based on the options volatility in the prices, VIX is defined. It's primarily a fear factor. If the market is volatile, the option prices or the underlying equities moving $20-$30, like for example, Amazon without the split, if it was 3,300, if it goes to 3,350, 3,310, it means it's highly volatile in a time frame of 5 minutes. So its fear factor has increased. As a result, the options, which are the derivatives of the underlying equity, Amazon, they will use that implied volatility and increase the option prices, because now the fear factor has increased. That option volatility constitutes across all the platform, or like all the stocks, defines VIX. So VIX is a derivative of the stocks. It's a way that if market drops, VIX will go higher based on it. It's not that the VIX goes up and then market drops. It's not like that. Okay.
So now, thank you for the explanation. But I am thinking with this extent of drop, the put prices should go up significantly. So we should
Why?
see a very high spike in week. If the
Why?
put prices are
Why?
not going up, that usually suggests either the market participants are not feeling the fear, or they're very complacent. You know what I mean? Like, although the market is dropping.
Again, I'll clarify on the PCR thing as well.
Uh-huh.
PCR, if you look at right here, statistics. If you can see my screen, this is the put call ratio. Okay. And put call ratio is saying 1.359. But do you know that this put call ratio is based on the open interest, is based on volume? I am not able to figure that out. Because put call ratio is opposite in terms of open interest and in terms of volume. And put call ratio is primarily used and derived using open interest. This most likely is based on the volume, which is irrelevant. So when you're evaluating a put call ratio, try to do a very simple exercise. For example, you're looking for a put call ratio for Amazon or any index stock, right? Before the close of the day, take the current value of open interest. Before the start of next day, take the updated value of the open interest and compare. And then take a put call ratio of that open interest. That will give you a clear idea where this price is going to move. Otherwise, you will end up. I've spent years and years understanding the open interest. This put call ratio is, see, in US market, the worst thing which has happened is they do not give you a real-time open interest information, because that will destroy all the funds. Because if you have a real-time open interest,
Now, you
yes,
can use dollar $PCSP on the space bar. That will give you real time opening, like real time put call ratio for S&P. If you
but
put
that's based,
dollar PCSP, that should give you a real time put call.
but
You can
that's
even
based
find out
on the volume, right? PSPC.
dollar PCSP.
These are market internal, right?
These are market internals. I think we should be able to see a live value between 0.1 to 1.1, or it can go higher, but usually trades between
What's dollar PSPCI?
PCSP, put call ratio S&P. So if you put dollar PCSP, it should pop up.
It's 0.85.
Yeah, so that's usually when it touches like 1 to 1.1, that's the put fear factor, or like the put volume is much higher.
That's what I'm
for
saying.
The day.
Volume does not give you a clarity as compared to the open interest.
Yes, but this has been like, if you see it on a long term, this has been tracking the market reversion reasonably well. You know what I mean? It's like when it goes to 0.5, we can see.
This is daily, right?
No, you can go 5 minutes, 15 minutes. It's fully
No,
available.
I don't believe in 5 minutes, 15 minutes. I am telling you my understanding. You may test it on 15 minutes, 5 minutes, but when you are evaluating put call ratio, right? Call ratio should be based on the open interest. I'll explain you why. You may, like, for example, I'll just using 5 minutes here. Let me pick up this. So this is the volume in 3740, 3750. All right. So you keep adding all these open interest and there's zero volume in any of these calls. This is 14 call, 15. So when this volume translates into the open interest, whether it becomes 360 or it becomes 336 or in between, that will give you a clear idea. Now, PCSP is based on the volume. It means that the position may have even closed. It happened in the day and it closed. It doesn't give you that confirmation that yes, are there any shorts? Are there any longs?
Okay. No, but it do work as a live. It's a live value. You know what I mean?
Live value, but again based on the volume, right? Supposedly, let's say we are 10 people, right? And we are trading options between each other. 1, 2, 3, 4, 5, 6, 10 people, right? I opened a position. Someone I opened I want to sell an option. Okay. I need to have somebody who needs to buy that option. Correct? Otherwise, that position will be taken by the market makers because they need to provide me the liquidity. If I open a position and I hold it, like if I hold a position, that means I still have a short interest in that. If somebody takes that position and close it, that means the volume was 2, but there's 0 open interest. The transaction is complete. It does not give you the real time. I don't know how you are using it, but that's my understanding, and I am pretty sure that is what I have read and learned. So coming back to that PCSP, now look at this, and I'll also open up the SPY table in conjunction to it. All right. Now, as compared to this is the put call ratio, which is 1.17, right? And this is for 610. And these are last 3 days put call ratio. All right. Before that, it was here and it was here. And we have 5 red days back to back. It does not constitute one-to-one mapping at all. And that's why I have trouble using this. If you use the real-time open interest, this will clearly map. Because open interest in real time will have 4 states. It will be long, built. Like once I'm in India, I have a platform. I need to open the, what do you call it? Like my account is logged. I need to go and give my KYC. I'll exactly show in real time how these positions are built or changed. So open interest will have long build. You will have short build positions. You will have long unwinding, meaning somebody is closing their long positions, and short covering, where somebody is closing their shorts. This gives you where the market is heading. not the volume. Volume does nothing. Volume is a transaction between 1 and 2 people. Once a transaction is complete, that's it. But 1, 2, 3. If this thing is there, the volume will say 3, but open interest will say only 1. So that's the difference between open interest and volume. And that's why there's no one-to-one mapping. Rest, I don't want to deviate from this topic. We can talk about it later on.
Okay, Naval. Thank you. Thank you. We'll catch up later.
Anyone has anything else? Otherwise, it's already 11. FOMC expecting a good numbers. So if the bad numbers are there, it will be good for the economy. So I have no idea why Google will touch 2430. So, good night, Jeremy. All right, guys. If nobody has anything, I'll close this. So, you have anything else, Vijay?
No, all good. Thank you, Naval. Thank you. Nothing big. All good. Thank you.
All right. Thank you very much. Good night, guys.